For the last couple of months, I've been using Bernhard's currency strength indicator, and it was really only today that I fully understood. Well, I'm not sure I'm there yet, but I better understand how to apply his tool. And my discovery was when he drew some vertical and horizontal lines showing a potential trade entry. So I want to kind of illustrate that here and share this with the rest of the group and encourage anybody to give me feedback as to where I might be going wrong. So I've pulled up the currency strength indicator. I've got it on a 5-minute time period. I have a chart next to it also on the 5-minute chart time period. And one of the things that Bernhard encourages us to do is to trade during session openings. And what I'm looking at in this first example is the New York Stock Exchange, which is 9:30 New York time. It's a time when I've seen some volatility introduced into the market and yielding some good trades. So if we take a look at the zero line, which I have as a bold yellow horizontal line, so it stands out. And incidentally, I also have the 50 fib line bolded red, so it stands out. And I'm still trying to discover the value of waiting for the market momentum to go above that line, because I see just too many opportunities where it occurs without that being above the red 50 fib line. So maybe that's my next lesson to learn. But let's take a look at what we have here. What I'll do first off is I'll look for at least 2 time periods, which is represented by these dotted yellow vertical lines. So in this case it's a 5-minute chart, so these are 5 minutes apart. And I want to look for something, currencies that are either spreading apart and one moving away from the zero line on the upside and another one moving away from the zero line on the downside, or some currencies that are coming and moving down towards that, converging on one another, if you will. So for example, let's take a look at these two right here. We've got the US dollar and we have the green, which is the CAD. And so if we were to go ahead and draw those horizontal and vertical lines, here's how I'd go about it. Let me grab a line here. So let's see, I'm going to go out here to 2 periods, and I go horizontal on that one, and then I do a vertical on that one, and I'm going to replicate that with the US dollar. So I would go from here out 2 periods. That's a 10-minute duration in time. And grab one more line here and see what we have beginning to show. We have what looks like nicely opposed lines converging on one another. And at this point, we'd have no idea whether they're going to continue in their current direction. But I've taken 2 time periods. So based on that, I'd pull up the US dollar CAD chart, which is right here, and an entry would be suggested, in my view, right here, which is 940. So let's see, we've got 940 is going to be showing here. Now I've got a tool that's called a multi-sync tool. It's my crosshair, which shows up on multiple screens when I move it, which makes it really nice for studying historic price moves. So if I were to look at this as an entry, set it right there at 9:40 US New York time, and I'm looking for a dollar CAD, and I'm looking for it to go long because the dollar, the red line, is going up and the CAD is coming down. So at that period, 9:40, I'd be getting into the trade. So that would be right over here, and you can see that that indeed would have been a 47 pip move at that point. So that was my discovery. The rules basically would be to stay close to the zero line. I want a currency on one side of the and on the above it, and one below it, and in this case it's converging. I could also look at lines that were separating. So just for this, just for the heck of it, let's do this. Let's move this up here. Let's get this out of the way. Let's get this out of the way, and this out of the way. Whoops. Here we go. And let's see if there was another opportunity here. Here's the 0 line, and we want to go 2 periods. We see that the Swissy went up, but it came down after 2 periods, so that wasn't given any clear indication. We've already talked it. Well, let's see. We've got the yen, which goes from here up to here up to here. So let's see if we can develop something with that. On the yen, come on, stay there. Come on, stay there. Can't grab a hold of that thing. There we go. Okay, so if we were looking at the yen, which is the yellow, and that's out to 2 periods. Now we'll draw a vertical from there up to the CAD, which would be up to, come on, there it goes. Now what do we want to do in concert with that? Well, I guess we could go back and use the same CAD, so that'd be the CAD yen. So here we'd have, draw my vertical from there, and then go ahead and grab my, I'm sorry, that's a horizontal, and now draw my vertical down to the green CAD right there. So we're seeing converging to the 0 line. We're seeing it converging to the 0 line. I actually crossed it right up to here. So we want to look at the CAD yen. So let me pull up the CAD yen pair. So right here. And that would be the same time. That's at 9:40. So if I get my crosshairs, and we'd be looking at a short, because the green line is CAD and that's coming down. So sure enough, there we are, an entry somewhere in this range right there, and the potential for a trade that was about 18 pips coming down there. So we could do the same thing. We could do the same thing for another time of session opening, which would be, say, the 8 o'clock, which is right there. This is 8 o'clock. Here's my 0 line. Let's do one more. So this is 0 line right here. And so if I say, okay, if I wait, obviously you've got to wait for at least 2 periods. In other words, 2 5-minute periods, 2 5-minute bars, if you will. So we could say, okay, here's the euro going from there up to there. So let's draw my lines, and I'm sure after you get good at this you don't have to draw these lines, but I'm doing it because for the moment it's what is getting it inside my head. There's that, goes over 2 periods and goes up to the line to define the fact that it's going in the right direction, and we'd want to look for another one that's opposing. So let's go with this, the Kiwi, the New Zealand. So I get another line like this, and we know we want to go out 2 periods, and we want to go down until it touches down to there. And so we're looking at the Euro New Zealand. So let me pull that up on the Euro New Zealand, which is right there, and that entry would be taking place at 10 after 8. let's see, today was the 15th, so we had red news at 8:30, so I'm not sure I would have traded this, but for the sake of illustration, let's go ahead and do this. We've got the Euro New Zealand. Here's where the entry would be, and we'd be going long. Let's see, that would be, yep, that'd be a long entry. The long entry would be on this bar here, so we would have gone up some 25 pips, 24, 25 pips, and that's where that red news would have been announced at 8:30 New York time. So were you to be in there, which is a risky move, at least for me, you would have had a drawback of 32, but you can see that ultimately it resumed its indicated direction, and up there, more than 100 pips to the north. So that's another example of another session opening. That was the 8 o'clock New York opening, and the same thing would have applied back towards the 3 o'clock, the London Open, which is right here. So let's do one more and we'll finish up. Here's the London Open. That's 3 o'clock New York time. I guess that's 8 o'clock London time. And here's the zero line. And again, I have yet to understand how to apply the market volatility line, because waiting until it's above the 50 fib, to me, I'm not seeing benefit, so maybe I'll learn that moving down the road. Okay, so let's see what we have here. There's 3 o'clock, there's a zero line, we got a red US dollar moving up. So let's do that. Do that up at the two time frame move there, and do this down to the. And what else do we want to do? That's going up. How about the blue? We could have chosen the pound, which is the dark blue, or the euro, which came down this way. So after two bars, two time frames, we'd have an idea. So let's look at the most extreme sloping line. Well, for the heck of it, we'll just take the pound, because that started right at the zero line 2 and came down. So that would be from the zero line to the pound. And one more line here would be, I guess we'd be doing something like this. So we see, actually I've got these the wrong place, don't I? I guess I'd be wanting to do this, and that goes up to that, and that goes down to the blue. I had those backwards, so I drew from the zero line out 2 periods, then up to the red line, and then for the pound, the dark blue pound came out here and then down to the pound. So that would be the pound US dollar pair. So let's put that up on the screen. Pound dollar, pound dollar. There's the pound dollar. And what time is this? This is 10 after 3. So I had to go back about somewhere in there. And entry, and this would have been, we're doing a pound going down, dollar up. So this would be a short. So we would have expected a short. So there would be our entry about here. We would have a pullback of about 14 pips until it headed on down to over 100 pips drop. So, gosh, it looks pretty straightforward. And again, this is after having studied this for 2 months. So maybe I'm not the sharpest knife in the drawer, but I thought I'd share this with the rest of the group. And I'd simply like to finish off by saying I appreciate, Bernhard, what you've done, and I would also encourage that if you continue to get members of this thread that seem focused on just wanting to criticize and provide unhelpful commentary, that maybe if you'd censor them and just remove them from the room. It's just a distraction for the rest of us that see the value in what you've put together. And there's certainly not a lot of money in this, so I don't know why people would be fretting over money for this debate about who wrote this code and that code, for crying out loud. So anyway, that's just my 2 cents. Thanks for listening.